am so glad that you are part of my email list to get this extended version of Factor Cap, Can You Pay Your Child Tax-Free in Your Business? So from the beginning that you probably grabbed for free is yes, that is fact. You can pay your child up to $14,600 federally and have it be tax-free. The limitation here is when it comes to different states. So every state has different tax laws as far as standard deduction and child labor laws and all sorts of different things like that. So it's important to work with somebody that is aware of the payroll tax laws in your state. New York example is the standard deduction for a dependent is $3,100. So if you pay your child more than $3,100 in the state of New York, your child will be liable for tax liability. So it won't be completely tax-free. So if you are in New York, you pay your child $14,600, the $11,000 over that will be taxable income in New York. So it won't be completely tax-free. However, that doesn't necessarily mean that you shouldn't hire your child to help you in your business, because it is still a good tax strategy. Why? Because if your child has $11,000 or $14,000 in income, they are in that small tax bracket, whereas you probably have higher income, 50 to 100 to whatever, and you're paying a higher percentage in taxes. So if you don't pay your child and you are doing the work yourself, you are claiming all that income, all your profit, and paying that higher tax bracket. So an example, maybe you're in the 30%, you're paying 30% in taxes federally and with state. But a strategy is to hire your child for services in your business. They actually have to be providing services to your business as an actual employee. So you do still have to have them fill out new hire paperwork. Ideally, you should still submit payroll tax returns, but it would just be zero. And ideally, you should also provide a W-2 to them and have all your documentation in place, timekeeping records to prove that you are actually having your child work and you're paying them legitimately. But in the example, so you're paying them $14,000. Instead of you paying that 30% on that $14,000, your child is most likely paying like 10%, whatever that smaller bracket is. So you're saving 20% in taxes by shifting that income from the higher bracket to that smaller bracket. Another tax strategy that you may hear often too to help your child save for retirement or for college is, again, having them be an employee in your business, paying them from your business as an employee. But instead of actually providing that cash to your child, have it set up so that it goes directly to a Roth IRA account. So that way, when they do go to retire, they can pull out from their Roth IRA account money that they've earned as a child tax-free. So you're not having to pay income tax and Social Security and Medicare taxes on this income if they're under 18 years old and you are a sole proprietor or single member LLC business owner or partnership, and that you and your spouse are the only partners. That money can be tax-free or at a lower tax bracket, so you're paying minimal tax dollars on that. And additionally, if it's in that Roth IRA account, when they are at that retirement age, they can pull from it tax-free. So they're getting that money tax-free again. So it can be really strategic if you are able to put those strategies in place and pay your child tax-free and then have them have a retirement plan they can pull out tax-free when they're older and actually need the funds, rather than when they're children and most likely don't have too many things to spend money on besides Robux and Pokemon. So those are some things to consider there. Now, once they are 18 years old to 21 years old, there's still some tax savings there. They are liable for Social Security and Medicare. However, you don't have to pay the federal unemployment tax. So you get another benefit if they're under 21 years old. If you are a corporation, so you're a C Corp or S Corp, you don't get that benefit. Their whole income is taxed no matter their age, and they're liable for the Social Security and Medicare. So that's something to be mindful of as well. It is only a tax strategy for my sole proprietors and single member LLC owners or partners. But again, the partners have to be just you and the other parent. If there's another partner involved in that, then it kind of voids that. So if you have more questions, reach out to your tax accountant or feel free to schedule a consultation with me. Glad that you are here. Again, everybody's situation is different. There's lots of ins and outs, and again, it depends on what state you are in. So be mindful of your child labor laws and your state's standard deduction. Otherwise, it's a great strategy and it is fact.